All right, so for Wednesday, June 10th, I am going to be going over some technical analysis and just some levels that I am looking at for a short. Okay, so here in about 15 minutes, we have CPI coming out. I believe that's going to be maybe a little bit higher than expected, but um, we'll see what happens, right? In this market, in this bearish, I would say that this market is bearish since Friday. I would rather short pops here than buy the bottoms. But you can make money both ways. So like yesterday, we went from 29,800 all the way down to 28,200, and then jumped all the way back up to 29,200. Right. So you could have been in puts or shorts in the morning, and then longs or calls in the afternoon, and made a pretty decent amount, right? So overnight, we did not make it over that 29,200 level, so that's going to be resistance for today. And then also that 29,000 level, right? Because once we broke this 29,000 level, we tried to bounce off of it a couple times here, and then once we started breaking, we started rejecting it, right? So 29,000 is going to be a pop maybe where we can short pretty aggressively, 29,000, and then maybe a move back down to Friday's low, which is right here at the 28,781, which we're trading below. If CPI comes out hotter than expected, that actually might be good for the market, just because the Fed probably won't raise rates if interest rates, or if CPI is a little bit higher. But if CPI is a little bit lower, and the consumer has still enough buying power, I think the Fed might want to raise rates, and we have about like a 60% chance there in December to raise rates, according to the CME Fed Watch tool. Um, that might not be good. Okay, so if there's interest rates that are trying to go on, or if the Fed wants to raise interest rates, I don't know if the market's going to really like that, right? So if it's higher than expected, we might go up. If it's lower than expected, we might go down. But who knows? I don't know. But these are just the levels that I'm looking at, right? And I do want to see a move back down to yesterday's low. I don't know if we're gonna get there, but we've been selling off and having some big volatility, right? And you got to remember one thing too: when you get to the levels that you're looking at, just for example, these levels here that I'm looking at. Let me just move those over so you can actually see them. Okay. You have to you have to wait for confirmation, right? You have to wait for confirmation. You can't just, just because I'm up to 29,000, right? I'm just not going to short there, right? If the market is staying strong and breaks and closes above here and starts making confirmation candles, meaning making higher highs, then that's when you're like, okay, I think that short or put position or thesis is out of the window now, because we have a strong market going to the upside. So when you get to your levels, you want to make sure that you're having a confirmation candle, right? So if we have a move to 29,000, I'm gonna wait for, not when it hits 29,000. I'm gonna wait for a candle to maybe close above 29,000, and if we make higher highs, then maybe go long. But if I see the candle close here with a wick, and then this next candle making a lower low of the previous candle, then I'm like, okay, my thesis is correct. I'm gonna go in short. My stop is a little bit above 29,000, and we'll just move forward with that, seeing if we can make maybe a move down to either Friday's low, which is 28,781, or if we can keep breaking that and keep coming down to Tuesday low and making lower lows. So you have to have patience, especially in your entry, and then just wait for your confirmation candle. So I do my entries off of the 5 minute, and I have to wait for that 5 minute to close, and then wait for that next 5 minute either to make a higher high or a lower low, just depending on what the market wants to do. So that's the game plan for today. I wish you luck in your trading, and we'll see you in the next video.